Hello and welcome to Share Spotlight. Today's guest is Kiran Morzaria from Cadence Minerals. Kiran, welcome to Share Spotlight. Thank you for coming along today. My first question really is about your business as a whole. Cadence Minerals. What is your investment strategy going forward?
Yes, so Cadence Minerals is an investment company as far as AIM's classified. We have around £25 million worth of equity investments in public companies. And then we have joint ventures. When you take that all together, it's about £36 million. And we've invested around £19 million over the last 3 or 4 years. Cadence's performance of those public equity shares has been about 120%. But all of those assets have progressed really well, with two completing bankable feasibility studies in December this year, and one in the process of embarking on BFS critically within this lithium and rare earth sector, which is all part of this green and electric vehicle revolution. And we've always been that, and we've been looking, well, actually over the last couple of years, as how do we extract more value here? How do we deliver more value to our shareholder base? And one point of that was at one point we were going to do a merger with Bacanora. And then, of course, now more recently, we've now embarked on a process of becoming much more active in our participation in new investments. And we've been reviewing that for the last sort of 6 months and have got advanced stages of due diligence on 2 assets, which we could acquire up to 49%. That's the target in the negotiations, and structure it so there's an optionality in terms of risk, so we don't have to commit too much capital. So that's the plan going forward, which we hope to utilise the cash that we have on hand to reinvest in these assets, and once they get to a certain point, utilise the balance sheet to progress them further.
From an existing shareholder's point of view, the word using existing cash on balance sheet is useful to hear because they're obviously worried about dilution going forward. So your plans are to utilise existing cash resources. Yes,
certainly for the next 1.5 years, that is the plan, because early stage exploration is not that capitally intensive. I've previously said around the £1 million mark in total between 1 or 2 assets to get it up to some sort of idea of a maiden resource. Of course, this is all early stage, speculation because we haven't finalised the transaction, haven't completed the due diligence.
But that's likely to happen sometime in 2018 by the sound of things.
Yeah, I would certainly hope that it would happen early in 2018.
You obviously restructured the business slightly when you sold some of your Bacanora holding. Could you explain perhaps the reasons behind that and what you did with the money that you raised?
So I think we have to take ourselves back to about a year ago, and 2 things. Obviously, I was on the board of Bacanora Minerals, and the board of Cadence. We had to act in isolation because what happened is there was discussions around a merger of the 2 entities. The capital raise was a loan note. We had raised a capital about £10 million for a loan note, of which we invested £4.5 million into Bacanora. And that £4.5 million took us up to, I think, around 16 or 18% at the time, as sort of leverage in terms of the negotiations. Now, that merger didn't occur for various reasons. And ultimately, that loan was a 1-year period, and we did need to pay that back and restructure. So what we did is, we had a coupon of 5% on that loan note, which was reasonable in the mining sector. We halved that coupon, restructured that, paid back half of that amount, and the remainder of cash is what we're going to use to reinvest. So what we do is we pay back half amount by selling our Bacanora stake, which we measure our performance on each share that we buy. So the Bacanora stake that was sold was based on a first in and first out basis. So that allows us to measure the sale on each share. So we bought some at £1, but we want to be hitting returns in excess of 70% on our sales. So that was booked. It was the first shares that we bought, and we got around a 70% return on that investment. And overall, our overall investment across our portfolio is about 120%. So we utilised the sale of Bacanora to restructure our loan note. Allowed us to negotiate better terms in terms of the coupon down to 2.5%, And on top of that, it allowed us to now free us to look at new investments, which we had been looking at previously. So that restructuring has allowed us to then move forward without any dilution, without any current dilution, and then move forward and hopefully progress these new assets subject to DD through exploration, through the early exploration phase.
You obviously have a lot of investments at the moment. What would you class as your maturity stage? Is it around PFS, or is it around share price value, or capital growth for your company as a whole?
We are about capital growth. We've made no bones about that. We invest for capital growth, so we take it early investments. We've always invested in greenfield. Some of those don't work out, so our Greenland assets, we invested really early on, and result of geopolitical issues, particularly with the lack of extraction for thorium in Greenland, and the capital investment that GGG needs to make, which we're close to that, has delayed that potential return. So we've always invested early stage. The majority of those have turned out really well. EMH, Bacanora, Auroch, MacArthur Minerals, as I said, giving about a return of 120% to date. And what we would look and what we say is that around the PFS stage, all the way up to production is where our exit could possibly be. Now, to say that is, and the reason is that the technical risk comes down dramatically. You do get an increase in corporate risk, so you don't, which are harder to control and harder to understand, even for management. That's corporate social responsibility, geopolitical risks, etc. So, and financing risks. So we view that as a bit more intangible and harder to control. So we look at that exit, and also that's where some of the largest capital growth is. So, but what we do is we assess on a case-by-case basis. So, for example, if we see although it's highly unlikely, if you see a price of an equity go above the NPV value that you see when it comes to production, then of course that will be a time to sell, because you've then got no time risk. So, but at the moment, that's where we look to exit. And of course, the other aspect of that is looking at the potential returns, risk-based, risk-approached. What would you be able to deliver better returns by investing? And in our case, we're talking about the future story, managing our own projects or having a greater deal of input in exploration and development.
Looking forward to 2018, obviously we briefly talked about new acquisitions or new investments you're going to make. What exciting projects or what investments have you got you feel going to be quite exciting for 2018?
Well, I think in a lot of ways, a lot of them do have really great news flow. We have to look at, and it's like picking which is your best child. Difficult to do because they all have great quality. So you've got the bankable feasibility study due for Bacanora, which will be ultimately followed by financing, construction and commissioning. That's great news because that's getting them towards the production into a market that is crying out for lithium carbonate in particular. So that's going up the development curve all the way to production, and that's going to be an exciting time. And hopefully you would see the valuation in terms starting to approach closer to NPV levels. We then have EMH, which has got the Sinovac lithium project. Now, that's about 1 year behind. I've always said it's got 1 year behind. It's got a much lower market cap than Bacanora. So therefore, it's got some potential. It's got the same sort of size of asset. The NPV is lower, but it's the same sort of size of asset. It's got roughly the same cost structure, a bit more capital expenditure, but fundamentally is as exciting as Bacanora. And then we've got Hastings, which we've got JV. We have to see where our mining ends up. And that's a free carry. So what will be mined from our areas, and that's part of what the BFS, and we'll see what value that delivers there. And then we have the other ones, which are things like Auroch, which is exploring for cobalt in the Czech Republic. So all of them have potentially great news flow. I think obviously the most certainty is that we know that Hastings and Bacanora Minerals are going to be delivering their BFSs by the end of the year, and that will certainly help shareholders and ourselves to crystallise and understand the value that will be attributable to Cadence Minerals over the coming years.
Obviously, the share price reacts to news flow. It sounds like a lot of news flow coming not only for existing shareholders but also potential shareholders. So lots to look forward to in 2018.
Yes.
Kiran, thank you very much indeed for coming today and talking to us.
Oh, thank you.
Thank you. If you want to find out more information about Cadence Minerals, do go to the shares website, or in fact go to the Cadence Minerals website where they have a full investor relations section.